The past week has been a turbulent one for the Indian stock market. Investor sentiment turned cautious, leading to a decline in major indices. Global uncertainties and domestic factors both played a role. Market participants are closely watching for signals of recovery. The coming weeks will be crucial in determining the market's direction. The benchmark indices, BSE Sensex and Nifty 50, witnessed significant declines. This sudden drop has sent shockwaves through the financial markets, causing concern among investors and analysts alike. The Sensex fell by over 2%, marking one of its steepest declines in recent months. This drop has raised questions about the stability of the market, while the Nifty 50 mirrored this downward trend, also falling by a significant margin. The parallel decline in both indices indicates a widespread market correction. This decline can be attributed to a combination of factors. Analysts point to global economic uncertainties, geopolitical tensions, and domestic policy changes as key contributors. These include profit booking by investors who are looking to secure gains amid the volatile market conditions and concerns about rising inflation. The increasing inflation rates have led to fears of reduced consumer spending and higher costs for businesses. The fall in these key indices reflects a broader trend of uncertainty in the market. Investors are advised to stay cautious and keep a close watch on further developments. While several companies reported positive quarterly earnings, the overall sentiment in the market remained cautious. The overall growth was modest, with only a slight uptick in revenue and profits. This failed to enthuse investors who were expecting stronger results. Many had hoped for a more robust performance, especially given the optimistic forecasts earlier in the year. Sectors like manufacturing and consumer goods showed resilience, demonstrating steady growth and stability. These sectors managed to maintain their performance despite the broader economic challenges. However, IT and finance lagged behind, struggling to keep pace with the more resilient sectors. The challenges in these industries were more pronounced, reflecting broader issues within the tech and financial markets. The market's muted response to earnings suggests that investors are looking for more concrete signs of a sustained recovery. They are cautious, waiting for more definitive indicators that the economy is on a solid path to growth. Foreign institutional investors, or FIIs, continue to pull out funds from the Indian market. This trend has been observed over the past few months, with significant outflows impacting various sectors. The withdrawal of these funds is not just a short-term phenomenon, but appears to be part of a larger, more cautious approach by global investors. This outflow of foreign capital has added pressure on the rupee and further dampened market sentiment. The Indian currency has seen a decline in value, making imports more expensive and contributing to inflationary pressures. Market analysts are closely monitoring these developments, as the continued outflow could have long-term implications for the economy. Factors contributing to this trend include rising interest rates in developed markets and global risk aversion. As central banks in countries like the US and Europe increase rates to combat inflation, investors are finding better returns in these safer markets. Additionally, geopolitical tensions and economic uncertainties are making investors wary of emerging markets like India. The sustained selling by FIIs is a concern for market participants, as it signals a broader lack of confidence in the stability and growth prospects of the Indian market. This sentiment is reflected in the declining stock prices and reduced trading volumes, which further exacerbate the market's woes, as it indicates a lack of confidence in the near-term prospects of the Indian economy. The government and financial institutions are under pressure to implement measures that can restore investor confidence and stabilize the market. Without such interventions, the continued outflow of foreign funds could pose significant challenges to India's economic recovery and growth trajectory.